Okie dokie. Okie dokie, everyone. Can I start off by saying either a good evening or good afternoon or even a good morning, depending on where you are around the world. Welcome to tonight's new episode of my Discover series for WiseBank. And tonight's episode is called Discover Trends and Arranging Markets. Written by myself, yours truly, James Alexander. I'm the market analyst here at WiseBank. So, welcome one and all. Now, just a brief introduction on yours truly. This hairy, wrinkly individual here, you can see sort of like, juxtaposed on the background is myself. Like I said, my name is James Alexander. I am indeed the market analyst here at WiseBank. I have over 20 years experience in the financial service industry. I actually started out at the young age of 18. I'm now 40, not 50, like a lot of people tend to claim, but indeed I'm 40. I started off in mortgages, specializing in the subprime market and then obviously commercial investments in the buy-to-let market before moving into pensions and alternative investments. I then became a trader and I traded for a product company. Kenny, nice to meet you. Welcome, my friend. You can indeed ask questions. Like I say, every single one of you can ask questions. All I ask is jot down your question and ask me at the end, because then we'll have a question and answer session at the end of this session. But like I say, I then got into CFD trading and option trading, traded through Dubai Gold and Commodity Exchange, and actually ran a trading floor in the Philippine Stock Exchange, as well as several other places around the world, before getting into portfolio management, where I managed a portfolio of around about 14.6 million. And then I got into education, hence me being here tonight. I'm indeed a published writer, and I've written several articles for several leading industry publications, including the likes of the Financial Times Advisor and Market Watch, and often I'm asked for my comments or opinions on the market. Not that I know exactly what's happening, because nobody does, but I will show you my opinion and my appraisal of what I think is going on. I'm an avid market commentator. One thing I will say about myself is I'm extremely passionate about the markets. I put that down to the fact that I was allowed to watch Wall Street, the movie, the film with Michael Douglas, at a very young age. And I'm a well-known public speaker, and I speak around the world at several industry events. Now, this is one thing I will say about myself, and I am totally open about this. Though I have got a very grounded experience and knowledge in this industry, so I've been in the actual trading industry myself, financial services for 20 years, but trading for around about 14 years. Though I have got a good experience and knowledge, I never once call myself an expert. The reason why I say that is because I don't think an expert actually exists in this field. So what I try and do is I try and share with you my opinions, my views, and my obviously mistakes, as well as my successes, with the idea that you'll take it on board and it will help with your overall education and knowledge, and you will find your own path. Okay. So if you're expecting me to give you the golden answer or the holy grail, forget about it. I don't think it exists. Okay, so this is a part of you finding what type of trader you are. Now, like I say, tonight's episode is called Discover Trends and Arranging Market. So tonight's agenda will cover the following. First of all, what actually is a trend? So we'll discuss what a trend is. Then, wrong button. Then we'll talk about trend lines, how you can draw trend lines and use trend lines to help you, of course, with your trading. Then we'll discuss the 3 rules of trend lines, followed by using moving averages in a trending market. It's a very good technical indicator to use in a trending market. Then we'll talk about what a ranging market is. Okay. Then we'll discuss channel lines. Again, the opposite to trend lines is channel lines in a ranging market. And we'll discuss Bollinger Bands and how to use Bollinger Bands in a ranging market. And then indeed, like Kenny has already said, we'll have a question and answer session at the end. So what actually is a trend? Let's face it, trading would be easy, wouldn't it, if the market just did this. Go up in a straight line or go down in a straight line. It'd be easy and we'd all be multi-millionaires. But reality, the market does this. It goes up and then it goes down. And it goes up and then it goes down. It goes up and then it goes down. And then up again. It's the same with if the market is falling. It goes down and then goes up. And then goes down and then goes up. It goes down and then it goes up and it goes down, etc. However, even though it does these sort of patterns, up, down, up, down, up, down, there is still ways in which we can work out, and this is the whole point of identifying a trend, okay? We can still try and identify an area of interest which we can then look at and then possibly enter or exit the market at that level. And one method, of course, is, like I say, drawing trend lines. What is trend lines, James? Well, let me tell you. A trend line is a line connecting two or more lows or two or more highs to indicate future price movement. Because at the end of the day, that is why we use technical analysis to try and identify future movements or where the market might be heading and where might be a good area of interest for us to potentially enter in. The theory is with trend lines is that, or trends in general, is that if two lower lows and two lower highs potentially indicate a downtrend. On the flip side of the coin, where you have two higher highs and two higher lows, possibly indicates a uptrend. Now, like I say, the whole point of drawing trend lines and identifying a trend is to try to identify if an asset is indeed moving forward, or sorry, moving higher or moving downward, and again to identify areas of interest. Now, like I say, as we've already established, the market does this if it's on an uptrend. Up, down, up, down, up, down, up, down. Okay. The idea, of course, with the trend line is if we're looking at an uptrend, we'll connect the lows to identify a potential area of support, which could be the area of interest, could be an area where we might want to enter the market in at. So let's look at some examples. Okay. Now, one thing I will say, look, whenever I'm putting the webinars together, I always do the charts on the actual day. Okay. I look at the charts on the actual day so we can see if we can identify them. Okay. I don't use charts from 2 years ago or 2 weeks ago or a month ago to illustrate what I'm talking about. I use the charts I find on the day and the currency pair or the instrument or the asset I can see following this particular pattern. Now, here's the British pound US dollar on a daily. Okay. Now, can anybody potentially see an uptrend or a downtrend on the sterling? Some can actually say potentially you can see a ranging market. You can, but I can also see an uptrend on the pound US dollar. And this is what you do. Let me get my little color pen. Here we go. Here's my laser pointer. Here we go. So, there. I'm seeing an area of interest here. Okay? Seeing an area of interest here. So, if I then went on and then draw my trend line like I do, low, lower, so a higher low, area of interest here where it's then tested. And as we can see, if we look at it, indeed, it acted as a support on that candle. Indeed, it acted as a support and the market bounced off it. And by drawing our trend line, we now know, again, it acted off the trend line there. We now know this is our area of interest. Around this area here is where we're potentially seeing a support. We're drawing the trend line there. We can see that it indeed acted as a support and the asset has indeed bounced off it, and it's bounced off it again on the previous trading session. Remember, this is a daily chart, so we then know this is our area of interest, which we'll be watching. Let's look at another example. This is the dollar CAD, again on a daily. Right. Most people on the long term can say, okay, we're looking at potentially a ranging market, of course, which we'll discuss again later. But again, I can see a potential uptrend. Connecting the lows, nice, 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 nice. And you can see, indeed, the asset, the dollar CAD, has indeed touched the trend line and it has acted as a support. So we now know this potentially is our area of interest. Here's another interest. British pound, Japanese yen, again on a daily. Now, this here we can clearly see is currently showing, a pattern of being on an uptrend. So let's draw our line in again. There we go. Lovely. Again, connecting the bottom of this trend, of the uptrend. See it through, see it through, see it through, see it through. And here's something really interesting we need to talk about. Okay, so let's have a look. It acted as a support on this stage. Yes, it did. The asset touched it and bounced up. The asset touched this level again and bounced up. This time the asset briefly touched it and bounced up. But then it broke the level. And now that trend line is now acting as a potential resistance. Now, you know the rules. Those who've attended my other episodes on the Discover series, I did an episode a couple of weeks back called Discover Support and Resistance, because obviously we're drawing our trend line to recognize either support and resistance. Now, we do know the rule of thumb, not always, but quite often, okay, is that if support or the resistance is indeed broken by the asset, we know if it's broken if that support line or resistance line changes its roles. On this example, okay, we're now looking at it that this trend line has indeed broken around at this stage here, which meant it was acting as support here, here, and here at these stages. Here it is broken, and now we're looking at it to see if indeed it's changed its role and is now acting as a resistance. Now, this is the area of interest here. Is it going to act now as a resistance? And so this is the area to watch. Okay, this is the area to watch to see if indeed it's changed its role, is now entering as a resistance, and this could be the area of interest we could potentially be watching to see if this is a potentially good level to enter. Let's do one more. Again, this is the flip side of the previous pattern we saw on the previous asset. This is the dollar Japanese yen. Again, this is on a daily. Okay, there I can see it with the naked eye straight away. So let's draw the line in. Brilliant. Okay, you can see acted as support here. Briefly acted as support here as it then broke. Changed its roles, like we discussed on the previous slide, acted as a minor resistance, but now it's breaking again, which is, we can see, acted as support, didn't quite act as support, broke it, but acted as resistance as it changed its role. But now, this is our area of interest on this pair, because it's now trading, again, just above it. So will it then swap its role again and become a support? And if it does, this area of interest could be where we might want to look to do a long position if indeed this trend line holds, or indeed becomes that resistance as we were speaking. Now, with trend lines, like I say, a lot of time you're doing it with your naked eye. Okay, it's against your appraisal of the market and indeed on what you're looking at and what you can see. Okay, now there are rules, obviously, when you're drawing trend lines. Number one, trend lines should not be forced and should be drawn based upon what you see and not what you want. The other rule is the steeper the trend line, the less accurate it will be. It's no point in trying to force it and make it Steep because it's not going to give you a clear picture. One of the many arguments or many questions people ask me is when I show my charts, I do tend to show long-term daily charts. Okay, it's because the reason why I do that is because I tend to feel, and this is again is my opinion based on my experience, you need to find your own way and your own trading style. But in my opinion, the longer the time frame, the more accurate that level potentially is, and more of the bigger picture you can actually see. So the steeper you make it, again, you're trying to force it, the less accurate it's going to be. And the final rule of thumb is the trend lines can only be drawn when you at least see two tops or two bottoms. As in what I mean by that, if it's an uptrend, two higher highs, two higher lows. On a downtrend, two lower highs, two lower lows. So those are the guardian rules about drawing trend lines. And the biggest mistake people make is this one. They force something into seeing what they're seeing. They don't see history of it. And that's the mistake you can make if you do trend lines over a shorter period of time. Now, of course, not everybody are position traders or long-term traders or day traders and look at the daily levels. Some people are more like, swing traders, or they jump in the market to try and do a quick scalp or a quick trade. And there is another indicator you can use, again, which can work on a smaller time frame, where again you can use it for trends, and again you can also use it to spot the potential resistance and support. And don't forget, we look for the support and resistance for several reasons. One, to look for a potential level to enter in at. Two, a potential level to exit the market at. Three, to potentially set our stop loss. And four, to potentially set our take profit. So let's have a look at some moving averages. Here we go. This is the moving average. This is the British pound US dollar, again on a 1 hour time frame now, a lesser time frame. Now we know the rules on moving averages. I've discussed moving averages in my other episodes of my Discover series. And that is, the theory is, if the asset is trading underneath the moving average, then it's on a downtrend. If the asset is trading above the moving average, then it's on an uptrend. If it's trading below the moving average, then that moving average will act as a resistance, and it could potentially give us an idea or a way or an entry point to enter the market. If it's below, it will act as a support. Again, if we're going long, it could again give us an indication where we can enter the market in at. So let's have a look. Moving average, 1 hour, British pound, US dollar. As you can see, underneath it, downtrend. So let's see if it acted as a potential resistance there as well. It did there, briefly challenged it, but the candle didn't open or close above it, so it remained a resistance. Slightly tried to break it there, so it didn't quite give us a clear signal there. But this time it did, acted as a resistance, broke it there and changed its role and acted as a support. And here's our area of interest now, just as it's challenging just above it, as it's looking to swap roles as either resistance or a support. This is the euro dollar, again on a 1 hour chart. Again, this stage underneath it, the rule of thumb under the moving average, a downtrend above it, potentially an uptrend. If it's underneath it, potentially act as a resistance. Above it, act it potentially as a support. Let's have a look again. Yep, indeed, acted as a support. The asset touched it and moved downwards. Again, touched it and moved downwards. Again, touched it, moved downwards. Again, touched it, moved downwards. This point here, of course, it then broke above it. So, rule of resistance support, if it's then broken, it changes its role. And indeed, it acted then as a support and the asset started bouncing off it. So here's obviously our area of interest about here. We're watching now what it will do next. Will it remain as resistance, remain on an uptrend for the 1 hour session, or will indeed trying to break it again? So that's a trend in market. going up in one direction, either upwards or downwards. But the market doesn't always operate like that. The market often operates in difference. Like 20% of the time, the market during the day will operate in a trend. The rest of it, it will operate in what's known as a ranging market. And a ranging market is as follows. A ranging market is when the asset is trading between the same highs and lows for a good number of times. A ranging market can be defined when the asset is trading between the same support and resistance levels for 3 times or more. 3 times or more. So it does something a little bit like this. Excuse my crude drawing. And this is what we need to try and identify. Where the potential resistance is, where it's being sold from, and where it's being bought from. So this is the ranging market on the Aussie dollar, US dollar on a daily. Right. We can see potential levels here and here with the naked eye. Let's draw our lines in. So there's our potential support, which then acts as resistance. So again, we know it's doing those rolls. And we can draw another line in. Any guesses? There's our potential resistance. So we can see, apart from this part here, is acting between 2 levels. So let's have a look. Add as resistance, add as support. Add as resistance, add as support. Semi broke here and traded for a little while above it. Didn't really act or didn't really swap its roles and became a support. Remember, like I said, resistance becomes a support, support becomes a resistance. Doesn't work there, but then it trains between those levels, acting as resistance and support. And right now we know this is of our area of interest. Is it going to carry on acting as resistance and move up again? So acting as support, bounce up, and then potentially act as resistance around there. Let's look at another example. Again, on a smaller time frame for those who want to swing trade. This is on a 30 minutes. It's a British pound, US dollar. Okay, so this is short-term traders. Straight away, we can see our highs here. And straight away, we can see our lows here. So we can actually draw 2 trend lines. But using the naked eye, again, we could see potentially another range in the middle of that range. So as we can see, those are the 2 big areas of resistance and support. Okay, but in the interim, we can now also see there is a resistance at this level and a support around this level. So, and especially as you see, remember, it's touched it 3 times, again, acting as a support. So, again, we would then say, this is our initial resistance. This is our initial support. This is our secondary support. And this is our secondary resistance. So this would be the region or the area of interest we will be monitoring. As well as channel lines, you can use another indicator like Bollinger Bands. Okay, Bollinger Bands. And Bollinger Bands are very good or can be used by some traders, again, to identify and trade in a ranging market. Now, the rule of thumb, don't forget, Bollinger Bands, when the bands are close together, suggests a ranging market. When the bands are far apart, suggests a lot of volatility in the market and doesn't potentially really act as a very good, levels of support and resistance because the volatility is too high. So let's have a look here. That is a ranging market. You can see it there trading between true levels, and so that's what we're looking for. But as soon as the band does this, we're not 100% confident that we're in a ranging market. Something clearly has happened in the market, be it breaking news or be it something fundamentals has actually caused the market to be quite volatile. So this is not a good time for us to be trying to swing trade or range trade. We wait for this time when the bands come closer together, and that's when we look to do swing trades between the range. So look at another example. This is a dollar CAD. This is on a daily. Again, bands are close together. So again, giving us good indication of a ranging market. as you can see, the rule of thumb, the top band acts as resistance, the middle band potentially acts as the first support, and the bottom band acts as the secondary support. So let's have a look. Indeed, the top band floated down to hit the bottom band, and indeed floated up. Now, going back to the rule again, the middle band can act as a potential support and resistance, and as we can see on this, indeed acted as a resistance. Again, it swapped its roles. So what some traders do when they're trading Bollinger Bands is they go for the top band, but they set their trading stop or take profit around the middle band, usually a trading stop with the idea that if it doesn't hit that thing, they at least locked in some profit. And as we can see, it indeed fluctuates between the top band, the little band, and the middle band, indeed acting as a resistance there. Another example, this is gold on a 30 minutes. Again, touched the bottom band, bounced up. Again, as you can see, the bands are narrowly together. Used the top band again, acted as a resistance and pushed it downwards. Again, fluctuated around the middle band. Again, this is where you would potentially put your trading stop depending on your attitude to risk until it obviously hit the bottom band, and that's where you would then obviously set your take profit. And again, as we can see, it fluctuates, and this is indeed showing a range market, especially around this bit here, very narrow. Again, depending on your attitude, you often would keep an idea or mind's eye on the middle band in case you want to do a trading stop on that. And again, I'm not a big fan, I'm really not, of shorter time frames, but there are people out there who like to scalp. And again, you can use shorter time frames if indeed you are a scalper. So have a look at this example here. This is a 5-minute on the euro yen. Very volatile pair. Again, the top band acting resistance, bottom band acting as support, and vice versa. As you can see, it got narrower. So again, you can use a Bollinger Band to identify a ranging market in a smaller time frame as well. Right, future other educational events coming up. The next event will indeed be on the 25th of October, which this one, again, is still technically based. I will be discussing how to identify Elliott waves and potentially use Elliott waves in your trading. So that's on the 25th of October, the last one of the month, of course. If you wish to contact me, if you wish to ask me any questions, or indeed, if you want to suggest any topics or subjects you'd like me to cover, please feel free to email me at james.t@wisebank.com. T is my middle name, by the way. I won't tell you what it means. Plus, at the same time, we have just set up a Twitter account for myself. I haven't done any tweets yet, but I will be doing some soon. So feel free to follow me on my Twitter, which will be at James Alexander T. On my Twitter, of course, I'll be sharing educational things, but I'll also be sharing you observations of what I see in the market. So please feel free, come in. It's brand new, like I say, we've literally just set it up today. So feel free to follow me on my Twitter handle, which is, of course, at James Alexander T. And there we go. That's Twitter. On that note, is there any questions? Anybody like to ask me any questions at all on what we've discussed tonight? Anybody like to ask me any questions at all? Did everybody at least enjoy it? Everybody at least like it? I found it insightful. Okay, there's Mark there. Okay, thank you, Mark. Glad you find it insightful and interesting. Anybody else found it interesting or find it insightful? Mm-hmm. Okay. Sebastian has a question. Oh, no, he doesn't. He has a request. Can I do one on oscillators? Yes, actually, I've got a webinar planned for oscillators coming up very soon. So I will be doing one on that. in the coming webinars. Like I think, ladies and gents, do not forget, when I put these webinars together, I put them together for you, okay, for whatever you think will help you and help you find your way, okay. That's the idea. That's why I put them together. All right. So if there's any topics or areas you'd like me to cover or you'd like me to discuss, please feel free always to sort of send in your suggestions. Like I say, you can email me, your ideas or areas you'd like me to do, or indeed you can follow me, of course, on Twitter as well, and direct message me if you like, because I put this material together for you. If there's areas you want me to cover or share with you, if you maybe want me to do a case study on something like gold or oil, please feel free to do that. Okay, please feel free to do that. Oh, Christopher, you enjoyed it tonight. That's good. Thank you. Right. If there's no further questions or no further things people like to ask me, like I say, please feel free to contact me either on my email or my Twitter to let me know if there's anything in particular. But other than that, what I will say is thank you again for Sebastian and Mark for your questions. I like the interaction. I like people asking me things, because otherwise it does get very lonely. So I do like a little bit of interaction. But until next time, what I will say is this: can I wish you either a good evening or good afternoon or good morning, depending on where you are around the world. Till next time, every single one of you, trade safe.